Welcome to Module 7. This is all about developing your optimum payer mix and building your billing department. So to start, we need to talk about what type of payer sources you may be looking at. The most common that private practices look at is commercial health insurance payers. That's your Blue Cross, your United Healthcare, Health Net, the list goes on. But then we've got Medicare, we've got Medicaid, we've got workers' compensation insurance, personal injury, government contracts, staffing contracts, grant funding if you're a 501c3, private pay of course, and there's even more. There's employer funding, FSA, HSA, and all different ways to diversify your payer mix. The reason why we want to diversify your payer mix is you don't want to put all your apples in one basket. The other thing is different payers have different pros and cons, and so the key is to diversify it based on cash flow, margin, client retention, etc. So one of the things I've talked about throughout this course, and I'm going to say it again, the key principle to developing your optimum payer mix is you want 60% of that payer mix paying you 100% within 30 days or less. It's so important. And when I say 30 days or less, that's 30 days from the date of service. So as you build your billing department, it's important to get those claims in on time, right away, and we're going to talk about that more. But again, 60%, when we're looking at each of your payers, you want 60% of them paying you in 30 days or less. So one of the questions I often get is, Brandon, how do I get these commercial contracts? I'm interested in playing in the insurance game, and where do I begin? So at the implementation module, we're going to talk about certain things you need, such as your NPI, your tax ID, other areas, potentially your Medicare number if you're going to do Medicare. But the key areas for going after your commercial contracts are as follows. I want you to identify first and foremost, what contracts are you interested in? Do you want Blue Cross? Do you want Blue Shield? Depending on your state, it might be one governing body, a Blue Cross Blue Shield. What are the other contracts that you're interested in? Are they small? Are they big? Are they national? Are they state level? All things that you want to look at. So then you want to identify the commercial insurance contracting body. Something that you might not know is that certain insurances, depending on where you're located, you would contract direct to them, and certain ones are actually through alternative payer sources, such as Optimum Health. Typically is the governing body for United Healthcare. Blue Cross, back in the day when I was in California, my initial contract with Blue Cross, they actually required us to go through a network called PTPN. There are lots of networks that you want to research, and as always, you can call me if you need a list of those networks. But one thing that I want you to also think about is identifying your credentialing needs. There are several credentialing requirements when you're partnering with these contracting bodies, whether it be a CAQH credentialing or direct credentialing with the insurance company. Start to look at those. Start to do your research. The other thing you want to do is you want to submit a formal or informal RFP, request for proposal. Now, whenever I write an RFP, it's really important that you target what that payer source is looking for. And typically what that payer source is looking for is what your niche is, how you deliver medical necessity, what your clinical outcomes are, and what separates you, and what your call to action is for them. So an example may be, I bring a team of bilingual clinicians in a multidisciplinary outpatient clinic, and I have a track record as follows. Identifying them, making your sales pitch in your RFP is so important. The other thing I want you to do is I want you to make sure that you have your billing department locked down. Whether it's in-house or third party, you have to be ready and you have to share that you are prepared. The other thing to know is that your documentation policies are together. Do you have clinical documentation set forth that's going to align with what that medical insurance is looking for? So I always say that when you're dealing with a medical insurance, it's important that you identify the goals of your clients in terms of how it relates to the payer source. So medical necessity, you're going to hear me say that a lot throughout this next module, it's so important that all your goals are targeting the medical necessity of the patient. Whether you're an occupational therapist and you're targeting functional goals, how their milestones and goals that you're working towards align with the medical necessity of the function of the patient, or if you're a physical therapist, or if you're a mental health professional and you're working on mental health goals related to the medical necessity and the mental health of the client. All of these things are essential in your documentation, because let me share something with you. Your documentation and your clinical outcomes are how you justify them paying you for your services. The next question I get a lot is, how do I negotiate with payer sources? The other day I was on the phone with a private practice in Houston, Texas, actually. She's been in business for 18 years, and she asked me, well, how do I negotiate with these commercial payer sources? And I said, well, have you ever had a raise? And she said, in 18 years, she had never asked for an increase in her rate. And I said, have they ever given you one? And she said, well, no, they've only taken money away from me. And I said, well, if you don't ask, they assume that you're satisfied with your rate. So there's several keys to negotiating with payer sources. The first is you have to show the following data: that you have strong outcome metrics, that you have strong key performance indicators, that the supply and demand metrics play in your favor, meaning that they can't just go next door to another provider, that you are a needed item in their network of providers, that you have qualitative and quantitative analysis to back up why they need you, that you're going to provide them a strong return on investment in your proposal, that you have clinical bios supporting the integrity of your team, the background of your team, how you differentiate yourself, and samples of your documentation. And I say that because that's ultimately what's going to justify that you're doing quality work. Now, I always say your payer sources are focused on money as well as satisfying the necessities of their clientele. So I always say you make that call to action. Here's an example. Hey, Blue Cross, I'll tell you what, if I can get $25 more per visit, I can deliver a full 60-minute visit where I'm going to actually increase the clinical outcomes so that I can discharge your clients sooner. So rather than you paying for 18 visits, I'll get it done in 12, so that the long run you're going to save money and you're going to have clients happier. That's how you negotiate a payer source to align with their goals, provide them metrics, provide them a finite period of time that you're going to accomplish, in most cases, successful actions for them. And it's a win-win for all. You win because you actually are growing your margin where you can deliver a higher quality service. The client wins because they're getting better services and reaching their outcomes faster. And the payer wins because the big picture financial investment gets better for them. So important. You have to think about each party and what they're trying to accomplish as you attack the negotiation. So the last thing in this slide I want you to know is that the payer source has the power. It's so important for you to think about this. No money, no honey, as I always say. Well, the payer has the power. So you have to understand what their driving forces are. You have to understand what they're looking for, and they're looking to save money. So you have to really make a claim that what you're exchanging with them is in abundance. That's important. So secrets to creating a cash positive business model. And I say this cash positive. So cash positive is not just cash pay. It could be other payer mixes that pay you in that 30 days or less. So the first is you want to identify your niche. Very important. What separates you? How do you differentiate? I have a feeding practice where we're one of few that specialize in working with infants who have swallowing disorders. That's a niche. What are the value-added programs that you're offering? How do you exchange value to a client that they can't get through their health insurance? something that's important, or a third-party payer source. What are programs that you're going to deliver? I'm going to offer a telehealth service at no additional cost where they get a home exercise program delivered to them with coaching once a month as part of our contract. How do you add value to the exchange? I want you to diversify your cash flow. I want you to build a program with mailbox money. And when I say mailbox money, it's really important. Mailbox money is money that's coming in that doesn't take manpower. So how do you create a program where 30 days after a discharge, for $99 a month, they have access to your gym, to your equipment, to your home exercise programs, to videos that you've delivered for them to reference. All of those things are mailbox money. I want you to create, execute, and empower the customer experience. Do you remember the module before when I talked about the Apple experience? What's your customer experience? Create it, brand it, let them understand and be part of that experience so that there's no other place they want to go, that their extra revenue that they have is put into that. One of the areas that I often find is really valuable in the customer experience is preventative health. How do you focus on rehabilitating them, but then putting resources together to prevent future challenges that they may face? Look at not just them, but all of their surroundings. Maybe you're incorporating some diet strategies. Maybe you're incorporating some fitness. Maybe you're putting together some family dynamic. There are so many different ways that you embrace preventative health in today's environment. Utilizing and channeling the fear, but ultimately incorporating preventative measures that lead them to success. Again, as we said in the past module, let's make those metrics matter. Very important. Let's manage your market retention. I want you to evaluate how long people are staying within your program and how you have transitional care that supports them in the long run of their life. And the last thing I'm going to share with you in terms of really a secret to a cash positive business model is innovation. How do we innovate? How do we think outside the box? How do we relate with not just this next generation of millennials, but other generations? Innovation is key. So the next step is building your billing department. And this is really important because whether you outsource your billing department or you keep it in, you need to identify what your needs are based on scalability, complexity of payer mix, fixed overhead versus variable overhead. What can you afford? So when you're outsourcing a billing department, typically it's a variable cost, meaning that you're paying a cost anywhere from 6% to 8% of all collectible income is what you're paying on. So when you're small, I actually recommend the variable of outsourcing it as long as you have measures to hold that third-party company accountable. The other thing I want you to think about is liability and control. We're going to talk about this in the next slide, but something to think about is if you give the keys to your billing department away, do you have control there? So accountability, whether it's third-party or in-house, is really important. And then the ability to manage and ensure that accountability. So if you're one of these clinicians that you're just like, Brandon, I don't know what to do. I don't know billing. Okay. Well, there's several key metrics that you can hold that billing department accountable to, and we're going to talk about that in a minute. So I want you to understand the diagram of what a billing department looks like. It's really important. So step one, you got to verify the insurance. I always say verify the benefits if they're coming through insurance before you bring them in. Too often than not, I find that clinics bring the client in, do the evaluation, and then they start the billing process. But do you know how hard it is to collect from someone when they're expecting to come in and it to only cost them $5, $10, even $40? For you to try and collect, let's just say $100, $150, sometimes it's $300, and in their mind, they're thinking it's less than $40, very hard, and your image gets tarnished. So if they're looking to access their insurance, verify their benefits or have them verify their benefits in advance and provide you the information that they verified. Then I want you to enter the patient demographic info, hopefully into your medical EMR system, your electronic medical record system. Then we got to make sure the coding is correct. Get your ICD-10s. Understand the CPTs that your treatment codes that you're utilizing. Then you have someone charge entry. Usually that's going to be in-house. Your front desk person will actually enter the charges based on the way that the clinician delivered the service, or the clinician may even enter it. Then we submit the claim, and that's where usually I'll find third party gets involved, is that they double check the charge entry, they submit the claim, they then will enter any payments received, they troubleshoot the denials. What happened? Do they need more medical necessity proof? Do they need to see records? What's going on with that? Then there's accounts receivable that needs to follow up to make sure we get paid both on the insurance or commercial payer source side, but also the client side. And then the last thing is reporting. Reevaluating what's outstanding, what's getting paid, what are the challenges, what are the common mistakes that are occurring. Now, something I want you to think about in your billing department is that you're painting a realistic expectation to your clients of their risk. That the risk doesn't fall on the provider, but the risk falls on the client. And that's something that is so important. So I always say, I have this rule of thumb in life, and it's called under promise, over deliver. Paint the expectation that insurance won't cover it. Paint the expectation that if within 60 days it doesn't get paid for, the client will be held responsible. Start to look at those pieces. Now, you want to make sure that anything that you're holding the client accountable aligns with your insurance contracts. Very important. So I always say, when you're negotiating an insurance contract, make sure that you're negotiating, because an insurance contract is always written on behalf of the insurance company. So sometimes you need a third-party person to look at those contracts, to give you feedback, to understand how to negotiate that contract to your favor. Know that there are resources out there that can help you with that. Wellness Works Management Partners, we have a team of people that support clinics just like you in making sure that you're signing quality contracts. So here are the top 5 mistakes that I run into related to private practice owners and billing. Are you ready? 1, the private practice owner gives away the keys to the castle. I see it all the time. I'm sure you've seen it. They're like, I don't know billing. Here's my keys. You do it. Just get me paid, please. Don't do it. Ultimately, I've never seen a practice give away the keys to the castle and not have major issues in the AR department. So even though you may outsource things, I want you to hold them accountable. I want you to measure your reports and your metrics and understanding what's outstanding to get paid. Hold them accountable. Number 2, lack of organization leads to claims not getting submitted on time. I see it all the time. I walk into a billing department. The first thing I do is I actually ask the owner, can I look in the drawers of your billing department? And they say, well, why? I say, because I'm going to know how chaotic that department is based on the organization of those drawers. And they go, be our guest. Usually I walk in and I take out a stack of papers. And what I find is I find months and months and months of claims that people have kind of brushed to the side. I'm going to get to them. I'm going to get to them. I'm going to get to them. Nope. You need organization to your claims department. So important. An infrastructure, a systems, accountability. Nothing should be in your drawers. I repeat, nothing should be in your drawers. The next thing is a lack of transparency. Outstanding balances for patients increasing significantly, resulting in horrific PR and financial challenges. And I've seen this even in my mother-in-law's practice. Back in the day, I remember coming in and I went to our finance department and I said, what's our longest outstanding that we haven't gotten paid? And she said, we have some claims, just a couple, but we have some that are over a year. I said, what? And I said, what are their bills? And she said, around $5,500. I said, no one in their right mind, when I come to them and say, I need $5,500, they're going to be like, no. Trying to collect that level of money is so important. So I always say you need to have your stops. You need to have your transparency in place. And I never let an AR exceed $500 without a sign-off from the client. Never. Do not let your AR on a client exceed $500 without permission from a client. The next thing is the private practice puts production as the priority and signs a bad contract. Like I said, this client in Houston that I was speaking with, unfortunately they signed contracts that were awful. And I said, why did you sign the contract? And they said, because I needed the patient volume. Brandon, you don't understand. I understand that you basically just paid for those clients to get services because you lost money on every visit. I can bring in 300 new clients a day for you if you want to give your services for free, even more. You want to take Medicaid? In some places you can get lots and lots of clients just rolling down your doorstep. The problem is you're not going to get paid in many cases for sometimes 6 months, 9 months, a year, or even at all. Don't sign the bad contract. Out-create it. The easy route is to say, I'm taking a contract that's just a wealth of leads. In our next section, when we go into marketing, our module on marketing, we'll talk about how to build your client base. I would rather you invest in marketing than invest in a bad contract that funnels you clients. The next piece is confusion. I see it all the time. I ask questions, I get your eyes rolling to the back of your head, confusion, a little bit more confusion, thus impacting the evaluation of condition of the private practice. A great example of this is billed charges versus contracted charges. For those of you who are playing in the insurance game, they understand that you create a fee schedule based on billed charges because there are some insurances that just pay you a percentage of those billed charges. But your billed charges doesn't equal what you're expecting to get paid. So sometimes I inflate my payer expense, my pay list, because I want to get 80% of the highest rate. So I'm charging $225, but then you have contracted rates at $75. So you have to make sure you're evaluating the appropriate metrics. Don't evaluate your billed charges, evaluate your contracted rates and what you anticipate getting paid. So here are some strategies for billing success that I want you to keep in mind. Number one, ensure that your private practice owner reviews key billing metrics weekly, inclusive of what's going on in your aging report. What are the claims submitted for the prior week? What's accounts receiving? How much money is coming in? Are there any out points? Anything that's not traditional that you see that needs to get taken care of? Jump on it sooner than later. The next is I want the private practice owner to have a program for transparency with patients' outstanding balance, including a cap. You remember I said $500? Have that cap. The first visit in, I want them to understand their cap. You have $500 that I put on account for you while I bill your insurance. When we exceed $500, you're going to have an important decision to make. But I want you to understand that you're responsible for this $500 regardless if the insurance pays for it. Put the risk on them. The next is I want you, the owner, to utilize cash flow metrics. I want you to incentivize both the patients and your employees. Create the buy-in. Again, creative compensation to your employees, but then on the payer mix, maybe you actually incentivize your customers. Hey, I'm going to offer a discount. I do this all the time. Buy 20 coaching sessions with me and I'll give you a discount. Buy 20 visits with you, give them a discount. Maybe it's 10 visits. Collect the money up front. Have it so that you're cash flow positive. The last thing I want you to think about is that If you want to play in this game, I strongly recommend an electronic medical record system. So important. A practice management and electronic medical record system is a key to not just your metrics, but to doing electronic submission, claim submission, real-time claim info, having a patient portal where patients can access their charts. Very important.